The American dream did not die. It simply left the places to stop making room for it. Yes, it's not universally affordable for housing, but there are many places where it is. And we're seeing double-digit growth this year over year in purchase business. Pete coming to you live from Corona, California. Well, Team USA is playing tonight. Here we go. We got the shield on over here. This is a very old shirt my dad used to wear. We are big into soccer at our house with 4 kids playing club soccer. So hopefully now that we had the Uno reverse card on Balogun, we'll get that W against Belgium and those waffles. So hope everyone had a great weekend celebrating the 250th July 4th Independence Day celebration. Lots going on in our business. I read an awesome article because I hate fear and negative talk and all this stuff. I understand we have to have a dose of reality, but it seems like people just want clicks. This is a Housing Wire article. The American dream did not die. It simply left the places to stop making room for it. Yes, it's not universally affordable for housing, but there are many places where it is. And we're seeing double-digit growth this year over year in purchase business. So something's working. So hopefully you get a chance to read that article. I thought it was really good. Bottom line is the areas where, I live in California. I'm not from California, so I can maybe talk a little trash about it. It's super expensive. Permitting sucks. The state taxes the hell out of you. You're thankful to be here because of the weather. And they just make it really hard. And of course, if it's already built up, obviously there's just not as much land, so you got to move inland. You can see behind me in the hills there in Riverside County, there's still building going on here and in San Bernardino County. And there's plenty of places across America where there's building going on, especially if the local governments are making it easier and more affordable to do so. So things are good. Rates have trended down. We saw a 10-year Treasury touch as low as 431 last week. We're at 447. We're in a nice little range. We've got decent rates heading into the second half of the year. Not sure what's going to take to get a refi boomlet, but they could come. It's nice to see oil back to literally pre-war prices, which will be good at the gas pump. So that's good for people's pocketbooks. And we did have a jobs report last week, and the negative press is so crazy. It's like hourly wages aren't keeping up, with inflation. Well, first of all, people work a work week, which includes overtime, and weekly wages are at 3.8%. Now, if you believe the worst of the worst inflation reads we're seeing out there, we're at 4.1 or 4.2. Core is much lower, and we know that a lot of that has to do with the recent energy spike. I think it baffles people to know that markets and data get past fear that we read every day. We're mostly way past the tariff fear of last year. We're way past the oil fear of Iran. We're looking past geopolitical events. I've been saying since the day it started that, stock markets and institutional investors and bond traders and treasury traders, they look past these things. They're trading into the future. And so that war is not over. I still, with my conspiracy hat theory on, maybe after the midterms, we kick off bombs again and we could see this all over again. But I know there's a political component to it. So we're trying to make the peace until the elections, let each party duke it out with that. But yeah, inflation fear is not as bad as it seems, especially when you look at weekly earnings, not just hourly. It is keeping up with inflation, which is overinflated. People are not everyone trades stocks and pays that huge number that's in the inflation report for financial advisors. When people get high gas prices, they just stop paying for gas. And so, I think the inflation fears are going to subside. Now, jobs was interesting because the unemployment rate went down from 4.3 to 4.2 because people are leaving the workforce. The participation rate, I think it dropped something like 61.8% to 61.5%. That was enough to bring the entire unemployment rate down from 4.3 to 4.2. Which is why when you're talking about weekly earnings being at hourly earnings being at 3.5 versus 3.8, there is a big difference. It doesn't sound like a lot, but these numbers in the macro for the entire economy, they are meaningful. And so I think things are starting to look pretty positive for the second half of the year. It's still a grind because seasonally it's not the best time of the year for business. People are going back to school and start focusing on other things, but business doesn't go to zero, just like home affordability doesn't go to zero. So there's still plenty of business to go out there and get. So I'm loving the American dream, talk not being dead. June, huge June for the stock market. I'm not a financial advisor. I am not responsible for your losses, only your profits. People in memory, Micron, SanDisk, Seagate, Western Digital, I'm just absolutely crushing it. The market is finding these areas where there's scarcity, and that obviously is good for earnings and price. You know, Micron is signing like 6 multiple 5-year deals to give memory out. I mean, there's just things like that are nuts. So stock market's doing good. I know not everyone's involved. If you're not involved, but you want to be involved, but you don't have the money, paper trade. I paper traded for a long time, just fake trade, see how you're doing. Make all the mistakes that everyone makes when they first start investing. 7 OPEC plus countries agreed to increase oil production by a combined 188,000 barrels per day in August. So as crude prices continue falling from wartime highs, Saudi Arabia, Russia, Iraq, Kuwait, Kazakhstan, Algeria, and Oman are all increasing output and production. So I think we'll see even cheaper oil than we thought. The overall death rate in 2025 fell to its lowest point ever recorded, thanks in part to a steep decline in drug overdoses. So if any government agency or any political figure has been working really hard to not have drugs in our country, well, we have the lowest death rate ever in 2025. I think that's a good thing, regardless of your party affiliation. And one last little mechanism, gold, the ultimate fear-based asset, it doesn't yield anything, dropped 13% this quarter. I think Warren Buffett said some funny thing. It's just a lump of rock. You can't really do anything with it. It doesn't grow. It doesn't do anything. I mean, it's gone from 5,300 to 4,000. That doesn't mean it won't still go up. In fact, if Fed rate hikes become less of a talking point because inflation subsides and we have this weak labor market where the jobs report only yielded 57,000 jobs last week, you'll start to see potentially more talk of price cuts, or at least less talk of hikes. It's different. And that would actually be a little boost for gold. Not that I do too much with that because it's just not as exciting as AI and you would miss life-changing wealth. I'm not into being fearful and having my money grow at the pace of gold being mined. May job openings rose to 7.6 million, far above the consensus of 7.3 million. Some of those job openings in healthcare came out, which you mentioned on the last call. That's it. 7 minutes. Have a wonderful week. Get back to you for another video in Dallas, my Total Expert Customer Advisory Board. Cheers. Hey, it's KP coming to you live from Dallas. Got soccer ball in the background there. We got France and Morocco playing. It's halftime. Getting a video out real quick. I had a chance to go have dinner with my mom, who's 82, and my sister and her 2 kids, my niece and nephew. We were celebrating a little lunch. I happened to be in town for the Total Expert Customer Advisory Board. And today, RIP Dad, Leo Perenio, he was going to be 84 today. So he passed about 5.5 years ago. So we did a little toast to him and had a nice lunch. And so got one more work dinner and then hitting the road. And I may be off next week. I'll maybe do a video. I'll give you a little secret from my where I'm going next week. Anyway, so RIP Peace Dividend as well. I talk about the peace dividend a lot in just, this is a great example. Like when there's war, there's volatility and there's uncertainty and the flow of money gets disrupted. The price of oil could go up. The price of bonds could go up because they're not sure if the inflation is going to reignite because we don't have peace. When there's peace in the world, there is a peace dividend. And typically rates, volatility, and all that stuff calms down. And that's kind of how the flow of money works. So that's our word of the day, peace dividend. So I saw some cool Gen Z stats, and in the second quarter, 1 in 5 purchase loans were done by, or purchase locked loans were done by Gen Z, which is anyone 29 and under. So that's the biggest quarter they've ever had. So, and remember, Q2 had higher rates. So I know there's a lot of talk about like, no one's ever going to get a house and they can't afford it and blah, 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 blah. But even though purchase businesses up double digits year over year, and Gen Z just had their best quarter ever people 29 and under, remember, like they're not getting jobs because of AI and insurance is too high and they don't have any money and house is too high and, you know, all the stuff you read about home affordability. Nevertheless, our resilient consumer, the Gen Z cohort, was 1/3 of all first-time homebuyers in the second quarter when rates were high because of the Iranian conflict. They accounted for 27% of FHA. So thought that was pretty impressive. I think that's a great stat that's worth going over. Now, let me talk about the stock market. I'm only going to talk for like 2 more minutes. Super short video. So I'm not a financial advisor. I am not responsible for your losses, only your profits. Although Warren Buffett's got some advice for you if you can read that in reverse. There is a Treasury analyst or former Fed, I think, board team member, if you will, saying that AI is so entrenched in our economy, which, by the way, it's about 1.5% of the 2.2 GDP that we're experiencing. Definitely no less than 1%. But it's so entrenched now that it's more of a systemic risk than the dot-com era, the dot-com bubble. If those remember, in 99, 2000, and 2001, we had a really big stock market meltdown. And so there's a lot of leverage. There's a lot of money, trillions of dollars, tons of capital expenditure being spent. And to be honest, the ROI is still kind of an unknown. Having said that, I think in our industry, we're seeing ROI with AI spend. And I know a lot of industries are seeing that. And we'll continue to see that. But I thought it was pretty interesting that this thing came out. And so in this other article that I get, these are random articles I get for paid stock subscription analysis. So I share some of this knowledge with you freely. In the 2016 election, President Trump, when debating presidential candidate Senator Hillary Clinton, or Secretary Hillary Clinton, although I think Senator is probably more honorable, he said we are in a big, fat, ugly bubble. And now he just greenlighted I think they're calling the Trump accounts, where the kids that are newborns can get money and put it into the market, which is kind of funny that, you know, he called that we're in a bubble. I think he still believes we're in a bubble, but, you know, people could profit from a bubble. This bubble could go on for 6 months, 3 months, a year, 2 years. You never know. Like, the market can be irrational longer than we can be solvent. So, and that could go either way, up or down. So I thought it was interesting. You know, there's a lot of spend in AI, and I think we're starting to see a lot of ROI in our business. And, you know, but I do like the fact that Dell family, Michael Dell, where I used to work in 99 to 01, actually their stock helped me buy my first condo, which I still own from 01 in Austin, and it's rented out. And of course, Micron and some other companies are pledging money to put into these investment accounts for newborns. So I don't know if we're in a stock market pop phase yet of the bubble, but it's been climbing a wall of worries. So anyway, I'm not trying to tell you or make you any money. I'm just telling you, like, it was very interesting the same week that these Trump accounts came out to invest in the market that he has been calling a big, fat, ugly bubble since 2016. You know, it just goes to show, like, you can be fearful of something and yet still profit from something. You can think that homes are unaffordable, yet people 29 and under just had a record quarter ever. So, you know, we can hold two concepts in our mind that are diabolically opposed, you know, and hold them both to even be self-evident to some extent and kind of discuss it. Thank you, Steve Scanlon. I butchered your quote, and my Rewire mindset guy. Y'all have a wonderful weekend. I will get back to you with some more data, maybe next week, from another country. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.